Hello, everybody. I hope you're here for Nonprofit Compliance, Navigate with Confidence. Excited to have you here today. This is a really important topic and one that sometimes gets overlooked. And in the nonprofit world, it's especially important to be compliant with all the regs. And so we're gonna walk you through those today. Before I get started officially, I just wanted to welcome all of you. Thank you for being here and applaud you for being here, and thank Brady Ware for hosting this and providing this great education to all of you. So thank you, Brady Ware. And with that, I'll go ahead and get started because this presentation is chock full of good information. At the end, we will have time for Q&A. So if you could just jot down your questions, then be ready to ask them later. All right. I am Libby Villavicencio. I go by Libby V. So have been in the nonprofit field my whole career, which has been long, and I've had lots of different roles. And my favorite role is helping nonprofits to be more effective and more efficient and fulfill their mission. And so that is my passion, and that's why I do things like this today. So if you want to get in touch with me afterwards, my information was there. You'll get this presentation after, and let's get rolling. So today's agenda is we're going to talk about the compliance around and the steps to establishing a nonprofit. So if you already have a nonprofit, you can kind of just ignore that part. It just takes us a few minutes to walk through that, but it's especially important. And we know that we have some folks on here that are considering starting a nonprofit. So, and then we'll move into ongoing compliance. We'll talk about IRS requirements and state requirements. Then we'll get into the things, the processes that you should have in place to make sure that you are sustainable and also that you're accountable to the public. Because as a nonprofit, you really are owned by your nonprofit's owned by the public, and so you're accountable to the public, and it's important to have everything in order. So that'll be corporate processes, fundraising requirements, insurance and indemnification, intellectual property, financial practices, and then human resource processes. So with that, we'll get going. Compliance really is a crucial pillar for organizational success and sustainability. And I love that Brady Ware put this out in the marketing materials. It is spot on. When we think about sustainability and as nonprofits, I mean, that's what we're really aiming for, right? Is that we can sustain our work into perpetuity as long as we're needed to help with social needs. And so sustainability, the three pillars of sustainability are people, money, and then systems and processes. And compliance really fits into that systems and process buckets. So it's important that you have those in place. You'll walk away with a comprehensive understanding of the regulatory landscape that governs nonprofits, empowering them to safeguard their organizations against risk and pitfalls. So it's really not just about, well, we have to be compliant so nobody takes away our 501c3 or our incorporation or whatever, but it's really about risk, avoiding risk, legal risk, and also running into issues that are regulatory in nature, but also could be other things as well. So legal obligations, we're going to cover financial reporting requirements and best practices for maintaining that transparency and accountability. And all those are super important. So you'll get, I'm happy to share a compliance checklist with you after this. And so at the end, I can tell you how you can get that from me. And it has all this information in it. So you don't have to feel like you have to take, lots of notes while you're on here. Just kind of soak it in and take the notes that you want, but you'll get all this information afterwards. So. Okay, to establish a nonprofit, people get this wrong all the time. They go directly to the IRS first and apply for their 501c3, or at least attempt to apply for their 501c3. But there are a few steps that you have to do first. And if you go to the IRS first, you find that out. You find out, oh, I need to incorporate first with my state. So that's the first phase. So you have to register as a nonprofit corporation with your state authority. And that step typically triggers that you need to establish at least 3 board members. You need to get at least 3 people who will commit to being officers, and those 3 positions are the board chair, the board secretary, and the treasurer. So you need 3 people, names and contact information, who commit to being that initial governing board. Then you contact the IRS, not to get your 501c3, but to secure your employee identification number. You have to have that to go back and register with your attorney general. So after getting your EIN, you go back to your state attorney general or other state authority where you register, and you register with the state. Then you want to make sure that you are registered with the State Department of Taxation. In Ohio, where we are, that happens automatically when you register with the Attorney General, but in some states, I think it does not. So you might have to take that extra step of going to your State Department of Taxation and making sure that they recognize you as a nonprofit, so they're not trying to tax you. And then, there are other state registrations that you might have to comply with. You just want to make sure that you understand what are all the regulations for registering with your state. And we're going to talk a little bit more about state registrations that are ongoing in a minute. And then you can go to the IRS and submit that application to become designated as a 501c3 or whatever designation you're going after. That is, you're going to do that by completing and submitting Form 1023, IRS Form 1023. And so I've linked the instructions for that. Make sure you keep a copy of your 1023. That's going to come back around in the presentation today, and you need to have a copy of it on file. So make sure you keep a copy of that and you know where it is. And then you need to create your bylaws. And so bylaws are not legally mandated, but bylaws are highly recommended, because really what these are, they're also known as code of regulations. They're really the governing document for your board, for your organization structure, for the board structure, for the operations of the board, and that kind of stuff. So make sure that you have those in place. It's a good practice to have an attorney at least look at them when you pull them together. You can find templates, and I'm happy to share a bylaws template with you if you need it. But you want to make sure that an attorney has looked at them to make sure that they're all in order legally. When you get to this phase 2, you want to go ahead and start developing a more fully functioning board of directors. So often when we find 3 people when we're starting the nonprofit, and they aren't really the ones that we want to necessarily have in place long term, or maybe they are and you just need to add a few more board members, but really this is where you need to start developing a fully functioning board. And then you want to have some policies and procedures in place. And this is really important. In fact, in your 501c3, in your 990 every year, when you have to, we'll talk about that more later, you have to submit a 990 every year with the IRS. They ask you if you have the first 3 policies in place: whistleblower, conflict of interest, and code of ethics. You have to have at least those. But it's good to have other policies in place too: document retention and destruction, a confidentiality agreement or a non-disclosure agreement, social media policy, code of conduct, those kinds of things can be good to have in place too. So you might want to consider some other policies besides the 3 that are legally required by the IRS. And then you're going to want to set up your financial records. So you want to make sure that you're setting up an accounting system to really maintain accurate records of your finances. This is something that can come back to haunt you if you don't have in place, because if there's ever a question about anything that you're doing with the finances, you've got to have all that in place to make sure that you don't end up in legal trouble. That's really, really important. And we'll talk more about that too. So just know that that's critical. So then, as far as ongoing compliance goes, There are IRS requirements, that are state requirements. There are even municipal requirements, and we'll talk about those a little bit. And we're going to talk about some other processes that are important to have in place. And again, we're going to touch on your financial practices more in detail. So IRS first. When you do your 990, they are always going to ask you, has your structure, purposes, or activities changed substantively since receiving your 501c3 tax exempt recognition? And those things you put in your 1023 when you applied for tax exempt status, and you need to have that 1023, and it's a good practice to at least annually, especially around 990, review that and make sure that you're not veering off of what you said was your purpose in your application. If you do change your purpose, that's okay. You just need to submit that to the IRS. So they're going to ask you that. And you can put it in your 990. If you do change your purposes and you put that, yes, your purposes have changed in your 990, that is going to probably trigger the IRS to interact with you around getting that corrected. So, and I'm sure there's another form that needs to be filled out for that. So, you know, again, I said earlier, you have to, and I've said it a couple times, you have to submit a Form 990 every year when you're a nonprofit organization, just like you do if you're a for-profit organization. And the requirement is that you submit that 5 months after your fiscal year ends, within 5 months. You want to make sure that you know when your filing deadline is and put it in your calendar. And you want to make sure you're filing the correct form. So there are some guidelines from the IRS, and I put a link here that takes you to the page, IRS page, that spells out how to decide if you can do the short postcard form or if you have to do the full long form 990. And it's related to the amount of money that you raise and bring into your organization. So there are guidelines around that. Usually when you're a startup nonprofit, you have a few years where you're allowed to just submit the postcard, which is a gift, because going from the postcard to the long form it's a big difference. The postcard literally is just what can fit on a postcard, and the long form is several pages long, and you'll likely want an accountant or at least somebody who is a good bookkeeper to complete that form for you or help you with it. You can do it yourself, but it's often good to have somebody outside the organization doing that on your behalf. And then you need to review it as a board. The board has to review and vote to approve the 990, and the board chair has to sign it. You should have a written procedure for the review and approval of Form 990 before it goes to the IRS. So if there's nothing, if you don't get anything else from this presentation, get this: document everything. Write down your processes, write down your procedures, really document, because if you ever run into a problem, you'll need to have that documentation. And it does happen. It does happen where the IRS, or the state attorney general or whatever gets a complaint about your organization. Even if it's not a legitimate complaint, they still have to investigate. And that means that they're going to dig into your records. And so you want to make sure that you have your records in order and that you're documenting everything and keeping everything. And we're going to talk more about that in a minute as far as documents and stuff like that. So, but this one is important, that there needs to be a written procedure, meaning that, a lot of times nonprofits, I've seen this happen a lot. I've experienced it in nonprofits I worked in, where the 990 is, right up against the deadline of needing to be submitted, and and it just doesn't get the attention that it should. And the board really needs to understand that this is a really important form that they need to review and feel comfortable with and talk about in a board meeting and push on and question and all those things before it's approved and then submitted. If you have in your organization a paid executive director or CEO, whatever their title is, director, manager. Make sure that your organization is in compliance with the IRS's guidelines around pay for that person. There are guidelines, and basically it comes down to that it needs to be, it needs to be compensation that makes sense for the area that your organization is in, meaning region, part of address essentially. So what are the wages, typical compensation for executives in that area? And you want to make sure you stay within that. You want to make sure that you're in compliance with IRS prohibitions on political activity. So make sure you understand that. Nonprofits tend to err on the side of being too cautious about that. So ultimately, if you're not endorsing one politician or any particular person running for office, you can't do that. You can't endorse any candidates or anything. And so you want to be careful about doing that. But other than that, you can lobby, you can advocate with around laws or whatever, as long as it is not a huge part of your budget. It needs to be something like 5 to 10% of your budget is spent on advocacy or lobbying, and that's about the most that you can get by with. So that's also a link so that you can read up on that and make sure you're in compliance with that. Advocacy is important as a nonprofit. I once heard an attorney that I have a lot of respect for, who's a nonprofit attorney, and say if a nonprofit isn't advocating, they aren't fulfilling their mission completely. So so read up on that and understand. Have an attorney weigh in if you're worried that you're spending too much on advocacy or lobbying, and they will give you guidance on that. And then make sure that if you have a revenue stream, if you're producing income other than fundraising, other than charitable income, make sure that it's directly related to the mission, that it's contributing to you achieving your mission. If it's not directly related, then you run into unrelated business income tax. And that is, it's not illegal or anything for you to have an income producing activity as long as it's legal and ethical. However, if it's not directly related to your mission, then you will have to pay taxes on that income. Okay, so the 501c3, it only applies to income that's directly related to mission and activities that are directly related to your mission. So just know that. So state requirements, you're going to see some overlap here, which is helpful because if you've done it for the Fed, you'll be able to provide it for the state. So the state, is going to want to see your articles of incorporation. They may or may not ask for a copy of your bylaws. I find that that's usually not the case, but just in case. So you'll want to make sure, like, what does your state require? So the state is going to require typically an annual report. Sometimes they ask for other reports too. So for example, in Ohio, every 5 years, you have to complete a report that is states that you're still in existence, that your nonprofit organization is still existing. We also have a charitable solicitation application that has to be completed, registration rather, that has to be completed every year. So also for the state, typically states require you to check off that you have those 3 key policies in place, but especially the whistleblower and conflict of interest, they're always interested in those. You want to have a written procedure for actually putting the conflict of interest into practice. So there should be, a written procedure for how you have, your board officers or directors or trustees, whatever you call them, any key employees, that at least annually they are disclosing any potential conflicts of interest. So we could go down a rabbit hole talking about conflicts of interest, but ultimately it's, you can't, as in a nonprofit, whether you're a staff or a board, you can't do things that will favor you or favor somebody who's close to you or your place of business or whatever. So it's important just to disclose those. And, there are lots of conflicts of interest that arise. The important thing is disclosing it in a board meeting, discussing it, and then taking a board vote as to whether, the conflict is enough that the person needs to step off the board or get rid of the conflict somehow. So make sure that you're consistently, at least annually, asking everybody to complete that conflict of interest disclosure. And you'll have to do a little training with people so they understand what it is that they're, what is a conflict of interest? What would be something that they would need to document? Document retention and destruction policy is important. Confidentiality agreement, your board and staff are seeing lots of confidential information, and you just need to make sure that they know that they just can't talk about it anywhere else. You should have a code of ethics policy, social media policy, code of conduct. There are lots of policies that you could enact. There's IT policies and security and all those kinds of things too. So I think it's worth really kind of taking a look at what policies do we really need, and you'll start out with some, and then you'll add them as you go, and that's okay. Again, I said for our state, and probably for a lot of other states, you have to do a charitable solicitation registration so that you're licensed to go after contributions, charitable contributions. And again, make sure that your, sales tax exemption is up to date if you have to do that. Sometimes the state reports require you to submit, your financial reports. So usually they're going to look for, if they want them, they're going to ask for the profit and loss statement, balance sheet, cash flow for a whole year, for the last completed year. It's good practice to have those anyway, even if you're a small nonprofit. You want to make sure that your bylaws are accurately describing your current purposes, organization, and procedures. You need to, at least every 2 years, revisit your bylaws and see if they need to be amended, to make sure they're still accurate, to make sure they make sense. And so that's something that I would calendar. It's just like every 2 years, your board takes the time to really dig into the bylaws. So when you register with your state, you have to give them what our state calls a registered agent, which means they're the primary contact person for the organization. Sometimes that changes. Sometimes people move. Sometimes when you start a nonprofit, you put down somebody's name, whoever it is, and often it's their home address. And so then if you get an office, you need to make sure that the Secretary of State or whoever is the state agency that keeps track of your stuff, that they have your updated information, because if that registered agent is no longer affiliated with the organization, which happens a lot, they may be getting the mail or email from the state, and you may not be getting it. So you want to make sure that that is accurate. And then again, typically there's an annual report due in states. I know in Ohio, and I've got that here again, we absolutely, nonprofits have to do an annual report every year. It's brief. It's not hard to fill out. It's easy, but it's just one of those things that's easy to miss. So again, calendar that. Here in Ohio, I have to say that the state does a good job of notifying people that they need to complete that report, but you can't rely on that. And then, make sure, find out if you're required in your state to apply for a charitable solicitation license. And then just local municipal requirements. So, just check with your local municipality. So that's either the city, town, village, county, where your organization it resides, is established, and see if they have any requirements. So here in Columbus, Ohio, the city of Columbus does have a charitable solicitation registration. And most people don't know that here. A lot of people don't know that here. So you want to make sure that you've got all that in order and, calendared so that you know when you need to do all that stuff. It's important. Okay, so that was a lot, but let's move to just corporate processes. The rest of this is important for you to have. It's important for you to have in place and have it documented and pulled together so that you can find it, because if anybody ever does question anything, you've got to have that documentation. So meeting minutes are really important, and committee notes are important. Committee notes don't have to be as formal as board meeting minutes, but you want to make sure that you have all of your meeting minutes in some place where you can put your fingers on them, right? Where you can put your hands on them and find them. And so make sure you're keeping minutes at every meeting, that they are official, that you are absolutely documenting, who was present, who was absent, was there a quorum, and any actions taken, any votes taken. So who made the motion, who seconded it, what was the vote? Was it unanimous? Did anybody abstain from voting because they had a conflict of interest? Did anybody vote no? You want to document all that. So make sure you have that. And share them with your board members. Usually that's a pretty standard practice that at every board meeting, you approve the minutes from the previous meeting. And it's important for those board minutes to be approved by the board. It's really critical. And that should be signed off on too. So once they're approved, the board chair should sign off on them. You should have a current list of names, addresses, and terms of office for your board members, someplace where you can put your hands on it. And then you should save lists of members for a while. You should save your annual reports. You should save all correspondence with board members for at least 3 years. So yeah, you should have a a document retention and destruction policy. And you want to make sure that that policy lays out when documents can be destroyed or not. Some documents can never be destroyed. I hate to tell you that. If you aren't already connected with and using the National Council on Nonprofits, National Council of Nonprofits, something like that. That is an incredible resource. And one of the things that I did find on there was a document retention and destruction policy, which is very good. So I would use that source a lot, National Council of Nonprofits. Lots of free resources on all kinds of topics. Do you prepare an annual financial statement? So you might not be big enough to have an audit. Usually organizations don't need an audit until they get above $100,000 in annual revenue, but it's a really good practice to have those annual financial statements in place. You need to save your financial records for at least 7 years. I've heard some people say that you should keep some financial records forever. That seems a little extreme to me, but again, you can find that document retention and destruction policy and put that into place. Make sure it's legal, make sure it abides by all the, state, federal, all that requirements, but it's good to have that in place. So, you're going to get asked in your 990 and maybe your state report about, if anybody has had their check signing authority revoked, or, we're not doing as many checks anymore, but, anybody that's approving financial expenditures, have they been removed from that permission? That's a red flag. Because you had to remove them from that for a reason. So you want to make sure that you are, are doing the right thing when it comes to if anything seems strange or off, that you're, taking the right steps to not allow that person to have access to money. Does the board of directors conduct a periodic evaluation of the performance of the organization's executive director? This one nonprofits fall down on a lot. A lot of executive directors just never have an annual evaluation. And it's really important that, the executive director get an annual evaluation, but before they get that annual evaluation, the board needs to work with the executive directors to set goals. And then you can evaluate them based on goals and things like that. So you need to have job descriptions for the board of directors. So there should be a separate job description for each officer, and then just for general members of the board. Committee chairs should have a job description. You should use those for recruitment. People should understand what they're getting into. When you recruit board members, it's like you're recruiting a new employee. You go through the same process, the vetting process of hiring a board member. So let's talk a little bit about, excuse me, that was a bad mess up. Sorry about that. Let me get back to my presentation. Fundraising requirements. So fundraising and financials are probably the place, HR too, where you can get into some legal trouble if you're not careful. And I've known some of these instances in real life, like some actual nonprofit executive directors that got into trouble for their fundraising, for their lack of having all the practices and processes and systems in place with their fundraising. So first one, and this is a checklist, which is why these are questions. So, are you acknowledging in writing gifts over $250? So you should be acknowledging all gifts. That's what I'll say as a development, as a fundraising consultant. Every donor needs to get an acknowledgement, or a receipt is the other way to put that. So at minimum, legally, you need to send everybody an acknowledgement, a receipt for their donations over $250. I know somebody who, and this is a good illustration of why you need to do this kind of stuff. This woman I know started this nonprofit. It's a wonderful nonprofit. She provides a lot of help for people. She's amazing. She's passionate about it. I don't doubt that she's not honest. I have no reason to believe she's not honest. She, unfortunately, somebody reported her to our state because they thought that she used her donations for her organization to buy herself a new car. She did not. She used inheritance from her father when he died to buy a new car. She hadn't had a new car in like 20 years. It doesn't matter. Anyway, somebody reported her to the state attorney general here in Ohio and said, I think she's used some of the nonprofit's donations to buy this new car. So now the state is required to investigate. And so they sent an investigator to talk with her. And the first thing they asked was, how much money did you bring in charitable dollars? And what they discovered was the way that she was getting almost all of her donations was going to these events. She was adopted by this organization that puts on these conferences all over the country. And so they took her on as a cause, and she would go to those conferences. And at some point during the conference, when everybody was in one room for a meal, they would kind of pass a hat, almost like at church, like, let's help her raise money so she can help more people, right? And people were throwing cash in, cash, cash, cash. And she was leaving these conferences and traveling home with all this cash. She was not giving anybody a receipt. There was no records of where the money was coming from. There was no record of how much was raised at, brought in at each one of these events. And so she could not prove where the money was. She couldn't prove how much she brought in. She couldn't, they couldn't then follow a line of, okay, this much money came in. Now, where did it go? There was no tracking of the money. And so I haven't talked to her about it probably in a year, but when I last talked to her, she was on year 3 of working with the state attorney general on, trying to get things in order so that she could keep her nonprofit status in the state. And I assume it's all worked out because her organization is still going. But what a pain, what a hassle. And so she had to learn the really hard way. And unfortunately that happens, and it happens more and more these days with just, our atmosphere, our environment. Okay, moving along. If you receive gifts of vehicles, there are special regulations about that. Make sure you're registered to solicit donations. Track and document all donations. Track and document all donations, everything, including agreements with foundations for grants or whatever it is. Track everything. Just insurance and indemnification. Really look at what insurance you need. I really love the Nonprofit Insurance Alliance, and that's the website for it. They have some great advice. Their insurance is good. The cost is good. They keep the costs low. And they also provide a lot of resources. So that is a source that I highly recommend that you go check out. If you get your insurance from them, they provide lots of stuff for nonprofits. At least consider really directors and officers insurance and indemnification is probably the important piece. You need to have a statement in your bylaws that says that, that you provide that, and that directors and officers are indemnified from being legally, responsible for the nonprofit. So directors and officers insurance protects your board members and your officers of your organization from being personally liable for something that happens with the nonprofit. And that's really important, because if you don't have that, if somebody sues your organization, they're really suing every single board member and every single person that works there. And those people can be personally responsible with their own finances. Other liability insurance, I would think about that and study it pretty carefully before you decide what you should have. And the National or the Nonprofit Insurance Alliance can help with that too. So, do you have any patents, trademarks, service marks, copyrights? If so, keep track of those, and when they were, keep track of them. Like, keep the documentation. Make sure that you are renewing those when you need to. That's really important. So, financial practices. Your board needs to approve an annual budget. You need to have policies and procedures for internal controls of financials. So in other words, you don't want any one person to have all the responsibilities of the finances. That's when people can, borrow money from the organization because they're in a bad place. And it's just, you need to make sure that you've got separation of duties, and so that nobody has all the control over the finances. So make sure that, if somebody opens bank statements, they're not the same person as the person who pays the bills. So make sure that you have policies and procedures in place that protect the finances of the organization. You want to make sure that you have, if you have audits, you need to make sure that you have an audit committee. They are responsible for selecting the auditor, and that can be really helpful. And you want to make sure that you've got definitely a written policy for your accounting records. And make sure that your board members are regularly reviewing the 4 key financial statements. I have to say, I came across this Brady Ware article, The 4 Pillars of Nonprofit Financial Transparency, and it is so good. It's very straightforward, layman's terms, easy to understand. I would share it with your board members and probably cover it in a board meeting and train your board members using that document. How do you look at these statements? What are they for? Why do I need to look at them? What am I looking for? And then, if you have people, whether they're contractors or employees that you're paying, you want to make sure that you're following HR processes. So I'm going to rush through this because our time is getting to the end here. But the most important thing is be careful how you're classifying people who do work for you as independent contractors or as employees, and make sure you understand the IRS guidelines on that. Essentially, it's in the word independent. So when you think of contractors, they have to be independent, meaning that you're not telling them, what to do, how to do it, what time to do it, when, where, they have their own computer, things like that. Because if they're doing stuff that looks like they're an employee, they are an employee. And, you have to pay payroll taxes. And that is where you get into trouble. The IRS wants people to pay employment taxes when they need to. So, what's your process for determining staff salaries? You need to have some guidelines, some process that you use to determine that. Make sure that payroll taxes are being paid for employees, report all your new hires to the state, make your unemployment insurance payments, know what the workers' compensation laws are. The easiest way to make sure that you're in compliance with all this is to have a payroll company that does all this for you. And that is the best way. It costs a little bit of money, but there's a lot of affordable options out there. So you want to make sure that you have personnel files for each employee, an employee handbook, even if it's short and simple, an employment contract or written terms of employment that can be a job description. You need to have in writing the disciplinary procedures and the evaluation and appraisal procedures, and then have a document that has standards of unacceptable behavior. Have HR policies in place and use them and stick with them, and they can be part of your employee handbook. These are a list of the real important ones. And stay tuned for just a few minutes. That's it for the presentation. We're going to go into Q&A. So get your questions ready, and we'll get started here in just a minute. And thank you. Hello, everybody, again. I'm Libby V, and I wanted to introduce Thomas Wilson, who is a CPA and senior manager with Brady Ware. So he has deep knowledge about financial management of nonprofits. So glad to have you here with us, Thomas. And we're going to go through the questions and respond to those. And so what's our first question, Thomas?
Thank you, Libby. That was a great presentation. A lot of
Thanks.
valuable information there. Got a lot of good questions out there, and I'll start with the first is I would love to have a list of attorneys who can review nonprofit bylaws. Do those attorneys need to have this specialty?
That's a great question. So I have one attorney here in Columbus that I I have people utilize, and I'm happy if you're in this area. I think she does things virtually too, that I really trust because she's got a lot of knowledge about nonprofits. But I would say yes, you want somebody who has nonprofit knowledge. That's real important actually because there are just some nuances with nonprofits that are, have to do with the tax law and state requirements and stuff. So absolutely, I would look for that. And usually you can find on their websites if they do have that knowledge. But let me know if you want the attorney that I know, if you want her information. She's fantastic, and I'm sure she'll. I don't know where she's licensed, but that's always the way that you end up, not being able to use an attorney. But let me know if you want that information.
Libby. Here's the next one. If the organization is located in Ohio, but outside of Columbus, do they need to register with Columbus to solicit people online who live in Columbus?
That's a really good question. So, excuse me. I'm not sure that the municipalities and state have caught up to all the virtual stuff that's going on and online giving. Um, I believe, and I would like you to, really check this, but I don't think so. And I don't want to give you, the advice without the caveat of but don't take my word for it. I believe that they want those folks who are actually, doing fundraising activities beyond just blasting your stuff out to people and asking them to donate. I think it's more about, holding events, more like for those organizations that you might see with a bucket, standing out in the middle of the road, collecting donations and that kind of thing. Because if you think about it, we'd all, you all would have to kind of register with every municipality and state because you don't know where your donations are going to come from when you put them out on social media. You could always go ahead and register just to be safe if you do a lot of activities, in the area, but outside of Columbus. But I don't want you to do that if you don't have to. So I tried to look for that information and I didn't find it. And so Thomas, I don't know if you happen to know that or not, but it's kind of a pretty niche question actually. So
Yeah, most definitely. And it comes down to you're looking at, state versus municipalities and yeah, I think it's probably going to be specific to that to
yeah.
Columbus, I
Mhm.
guess.
Yeah. I think
So,
if your, nonprofit is located in Columbus, I would definitely register then. Outside of that, I would make sure I register with the state, which is what Thomas was suggesting. And likely you don't have to register with the city. So
yeah. Okay, we've got a good here's a board question. All right, so always struggled with the line between having open doors and transparency with boards and executive committees while maintaining confidentiality when appropriate. So, any thoughts on that?
yeah, I actually do have some thoughts about that. Really good question again. Yeah, these are great, so keep them coming. So I like to tell people, I advise people to err on the side of only telling the people that need to know when it's confidential information. But I would have every year, every board member um, sign a confidentiality agreement, just that they're going to keep things confidential to cover your basis. And you should be able to have, very open conversations with your executive committee and or board when you need to, but really always ask yourself, like, who has to know this information if it's confidential? Your board or members are running into confidential information all the time. Staff, definitely, if you have staff. Um, but anything that you have to kind of disclose, I'd start with your executive committee and let them make the decision as to whether or not it needs to go to the board. If there's some kind of decision being made or something, So that's my advice, is err on the side of only telling the people that you need to.
Yeah, that kind of comes with the territory. I mean, if you're going to serve on a board, you have a, a responsibility to maintain that confidentiality because you're going to be privy to sensitive information, and that's part of the
Yes.
role. So
That is
very
right.
good.
Yeah. Yep.
Okay, we've got a document retention and destruction policy question. So do these in our policy, do they need to include electronic documents or must all of those documents be hard copy?
Yeah, no, they can be electronic, and it does cover those as well. So it's any documents, whether they're, printed out or hard copy or electronic copies. So yes, that includes electronics too.
Perfect.
Mhm.
Let's see here. Okay, here's another board question. So during the presentation, you mentioned the board needs to approve the minutes from the previous meeting. Usually that's at the beginning of the subsequent meeting. So the board president should sign off on those minutes. So signing off, this is going to be your question. So wouldn't that just be that they are at the board meeting and part of the vote? So, and if that's true, and the board president is not in attendance at a meeting, does that board president need to actually physically sign off, or can this be maybe let's talk about what's meant by signing off on those meetings.
Yeah. So I think it's a best practice to have your board secretary sign the minutes just at the very end of the minutes, just put a signature line. Um, I would have the secretary sign, and these days an electronic signature is acceptable. So if that works. And then after the board minutes are approved in a board meeting, have the board president or board chair sign as well. So there's a line for the secretary and a line for the board president or chair, whatever their title is. If the board president or chair is absent, who acted in their place? So whoever acted in their place should sign them. So that can be, if you have a vice president or a vice chair, or whoever stepped in and ran the meeting. So, legally, would you be okay if there's no signature? Maybe. I again, um, some institutions are a little behind with electronic, stuff, right? So I like to have that process, and that makes sure that there's an extra layer of sort of accountability, and the board chair will really look at the minutes and pay closer attention to them if they're signing off on them. And board minutes are something that do get looked at if you ever get audited, for some reason. So they don't have to, we could go down a rabbit hole too about minutes, but the important thing is capturing, who's in attendance, who's not in attendance, who was absent, any guests that were there, and the votes, who made the motion, who seconded it, and what the results of the vote, if it was unanimous, if somebody abstained, if somebody voted no. So you just want to make sure those things are documented, and your minutes are important. They are legally binding documents. So you want to give them the utmost, care. And so that's why I like the signatures on them.
Yeah, very good information there, and documenting those motions to approve the previous meeting's minutes or any revisions needed,
Mhm,
that needs to be there.
mhm. Yes.
So got a few more questions here. Let's see. All right, here's a 990 question. So what are the IRS guidelines for which 990 form? So that'd be full 990, easy, etc.
And
What are the IRS guidelines for which form are we required to submit?
yes. So I will put, I'm chuckling because, when you read IRS guidelines, there's a bit of, trying to decipher the legalese and everything. And so I like to let other people read what the IRS has and decide for themselves. This one is a little bit clearer than some of the regs, but I put the link to that in the chat. And so, I'm happy to pull those up. But ultimately, I recommend that you go in and look. They have a table, and just to give you the quick version of it, if your gross receipts of revenue are normally less than $50,000, you can do the postcard. Um, at any point you can choose to do the longer form, and it's actually a really good form to fill out. It's pretty involved. When you start bringing in, revenue that gets to be, about $200,000, you're going to need to start looking at the form, the 990 form, the bigger form, the easy form too. But when you get to the point where you're having, gross revenue of about $200,000 a year, and you have some assets, you absolutely have to do the long form. So, you know, pay attention to those, and they do change occasionally, but I've shared the link, and hopefully that helps you.
Yeah, very good. So it sounds like this is going to be, based on as your organization is growing, you're
Yes.
you know that you're going to progress through the simple 990 reporting, the postcard through all the way up to the full, depending on your revenue size.
Mhm. Yes. Yes.
Here's
That's
an
correct.
If we have a couple of minutes here, here's an audit related question. So when does my organization have to get an audit, and what does
Yeah.
that typically cost?
Yeah. Yeah. Do you want to answer that one, Thomas?
Um, Yeah, the cost is very difficult. I mean, it's always, there's a ballpark, and that's always the tricky part. Um, the first year jumping into an audit can be daunting. If you think you're gonna, you know, get to that point, I mean, most of our charities here in Georgia, they're not required to have an audit. It's just, it's demonstrating to the donor base, we're demonstrating our fiduciary responsibility by having an independent auditor audit our financials. We can post those on our website. Um, yeah, it maybe, I don't know, maybe the easy answer is, well, it may depend on where you are, because I think there are certain states that require nonprofits to have audited financials.
Hmm. Yeah, and I'll add to that. That was a great answer. And you know, you you will need one, like Thomas, you said, when you get over like $100,000 annually in revenue, it's a good practice. Um, but also a lot of grantors require it, a lot of funders and grantors. So if you're applying for grants from foundations or corporations, or government entities, whether that be federal, state, municipal, they often ask for audited financials. But often they'll allow you just to submit your annual financial reports. Um, so, you can do that for a while and see what it gets you. If you have some kind of a change, I would definitely have an audit. And that is kind of vague. But if you're gonna engage in a big partnership or something, or you're going to merge, or whatever, definitely you want an audit then. But I would say, if you're going to go after a lot of grants, you might want to consider an audit. And you can get, a review, which is less than an audit and less expensive, and that can suffice, probably for a while, for a long time, if your revenue's not real high. So, and an audit will cost you what, Thomas, anywhere from Definitely four figures, sometimes five if you're complex and bigger. Is that accurate still? So,
It,
yeah.
yeah, if you're in the ballpark, I mean, it's going to be, yeah, probably low fives. So
Hmm.
maybe starting around, 10,000, depending on the market, for an
Hmm.
audit. And I'll tell you, what you mentioned with the review was something we do try to direct our clients who are growing. If you think you're going to start applying for grants, let's say in the next couple of years, start off potentially with a compilation or and then progress through to a review, then to an audit. It's much less painful and it helps identify areas of need, to be audit ready.
Hmm. Yeah, and an audit can be really helpful for, um, guidance on setting up your financial processes and systems too, right? A good audit will point out, maybe where you have a weakness in your systems and or processes, and so it's really valuable to have one done. You'll learn a lot. But you might be too small for one, and that's okay. You're not ready for one yet, so um, hopefully you will be. Thank you all so much for the interaction too. That's great. Hopefully you got a lot out of it and you have a good day. Thank you for being here with us.
Thank you.
Uh-huh.